small business, just like it sounds, sells and supports to small businesses. Today we're in 4 countries. Next year we'll be probably 12 countries. So it's small and mid-sized businesses. Our product line is Silver. You might know it as Silver. We're 100% mobile-based and 100% cloud-based.
Sanjay?
Hi, I'm Sanjay Subramanian. I'm VP of Technology and Architecture Financial Services with InComm. If you ever walked into a Walmart and bought yourself an iTunes gift card and activated it at the point of sale, the chances are we carried your transaction. We're one of the biggest in that space, and we are our brand of gift cards is the biggest in the United States. And a lot of people haven't heard of us, but that's probably the way we do our business. We are present in more than 300,000 retail locations across the United States and in several other countries. And from a prepaid product space, that's really what we do, and we do it very, very well. Thank you.
Good evening. I'm David Abouchar, and I run product strategy for ControlScan. If you're not familiar with ControlScan, we're locally based up in Alpharetta, and we focus on payments, compliance, security, and risk. Our primary channel is partnering with credit card processors, helping their merchants, their small to medium-sized businesses, help them through the PCI compliance validation process. And prior to ControlScan, I spent several years with Bearing Point Consulting and also the Federal Reserve Bank of Atlanta. Good to be with you tonight.
All right, so we thought we'd kick it off with kind of talking about the experience. So consumers right now are dealing with a transition to chip cards, right? They've got new cards in their hands. They're trying to figure out when you go to a point of sale, do I dip, do I swipe? They got to update their cards when they're on file with an app or a site. So how, as a retailer, how are retailers thinking about working with all the different competing technologies that are out there? What's the right way for a retailer to approach the space?
So I'll jump into that, Ginger. For instance, on Silver or any other product platform, it's the ability to handle all of those forms and simplify it for a retailer or a small merchant or even a large merchant. At the end of the day, if it's not easy for the merchant and easy for the consumer, they're going to move on to the next product. And so the adoption is there if it's simplicity. You know, you saw Uber up here as an example. You know, they've basically disrupted an entire industry. They've crowdsourced taxis, and they've done that because it's simple. The same thing is happening now in payments because of mobile and mobile devices. 2 billion mobile devices today globally, 6 million globally by 2020, and the disruption is going to occur to payments if it's simple. And so simplicity, ease of use, both at the merchant so that I can pay via social, via stored value, stored payment, gift card, credit card, debit card, cash, all of these, and the ability to utilize these or take those as a small business until the dust settles and there's something even over the top of that that disrupts that. But we'll talk about that later.
And I'd just like to add on to what Chris said. From a payment technology standard, EMV is something that is, at least in the US right now, probably setting the stage for a significant amount of near-field communication-based payment models. And as EMV itself has the NFC technology and the contactless stuff actually built into it, it makes life a lot easier for folks to try and come up with more standardized forms of mobile payments that then could hopefully become ubiquitous in the marketplace. I mean, EMV is one of those things that the US market has over the years resisted. I mean, I used to tell people that EMV in the US meant everyone must veto. And that's the way it's been for years and years, but thankfully there is some traction now. It's not been as good as I guess they wanted it to be. The EMV penetration as of the end of last year was probably about 35 to 40% when the Visa and MasterCard mandates went into effect in October. So the industry itself is probably still kind of to somewhat hedging its bets on EMV, but with that technology and that standard in place, I think there's a significant possibility that mobile payments will really take off in the US, and I can't wait.
I mean, I would just add, just to piggyback on the EMV discussion, I think EMV really has done, will do amazing things to really jumpstart mobile payments. I think primarily not because, I guess Ginger said, it's not that, you know, I think we're all used to just whipping out our plastic, using it. No one has probably really thought that there's any real major friction in that. It's predictable, it's known, it's ubiquitous. But when you start to get your chip cards and start to use them, I mean, it's a very cumbersome process. And I think that friction is going to drive people, both merchants, to start to educate and start to adopt and start to really push the ability to take a proximity payment on phone. And I think consumers also will embrace that too. I mean, one example is just my son, he's 10, he wrestles up in Johns Creek at the high school, and they have vending machines, so a couple days a week I'm up there, I get him a drink. And the vending machine takes, it's got a contactless reader, so an NFC reader. So I've started to use one of the wallets on my phone, and it's amazing how once you start to use that and start to form a habit, and then I go to the YMCA to work out, and they have a vending machine, a similar vending machine, but they do not take contactless, so I've got to whip my plastic out, and I'm starting to actually get annoyed by that. So I think once that starts to take hold, I think we'll look back and start to see, how much more of an elegant process using a mobile payment is.
I have a similar experience with Park Mobile, right? If I park on the street and I have to pay a parking meter, now I get mad, right? Well, one, I don't have any change, but two, it's so much easier when you can just use that app and put in the zone where you are and off you go. It gets a piece of cake. So it transforms that experience. So we talked about EMV, we talked about the folks dipping at the point of sale and it being a bit cumbersome, right? So consumers are already being forced to change. And do you think consumers really perceive any value in that chip card? And and beyond that, like what's going to get them to move from that on to contactless?
I think basically the value of the chip card is probably something the United States is probably not going to see very much very soon. Europe has been implementing EMV for 20 years now, and they're, I think, just about getting it perfectly right now. But the US has always been a networked environment. We've always had the online mechanism available, so you could always swipe your card and make sure the card transaction was actually carried all the way to your issuer. The offline mode, which was what was, I guess, something that was common maybe 20 years ago, where somebody would take a piece of plastic and swipe it on the machine and give you a piece of paper that you had to sign on. That technology is effectively the offline market, which actually is quite prevalent in many other countries where the technology is not really there from a connectivity point of view. So to that end, what you'll probably find is while EMV does not seem to provide that kind of value, the real kicker value, in my opinion, would be the NFC piece of it. Because once that comes in, and that enables mobile devices to now start acting as actual card-present transactions in the marketplace, where you could basically walk up to a device, to a reader, and just tap your phone. And as far as the issuer is concerned, you actually swipe your card. So to that end, from an experience point of view, and where you actually start putting in multiple cards into your mobile wallet, effectively replacing your physical wallet. And once you start adding rules to that by saying, okay, I want to charge all my grocery purchases to this particular card because it gives me a 2% cash back, but I want to buy my airline tickets using this card because that gives me an extra 5 miles per dollar spent, something like that. So with rules like that and being able to tap your phone, that's where I think the EMV standards will establish a level playing field for everyone to come in.
I mean, I would just add, I guess just to level set, make sure everyone understands EMV, what that is. It's really an authentication standard. There's an EMV Co. It's a standards body that's owned by the major card brands. So this notion of EMV, it stands for Europay, MasterCard, Visa. But it's really about injecting dynamic data into the transaction. So what we're used to today, the Magstripe has static data. So that's why all these breaches, it's very easy to counterfeit those cards and replay it in a physical setting. With what EMV will bring, it's an absolute known fraud reducer for counterfeit fraud. So there's going to be a significant reduction in benefit there as this dynamic data, every single transaction that we'll do with an EMV, whether it be EMV on the phone or EMV in a card, will carry this dynamic element and vastly reduce counterfeit fraud. So that's a significant benefit for the industry.
One piece on that I'm going to just throw in real quick. The reason that it's a big draw in the U.S. is the fraud shift. Maybe you do know, maybe you don't, but the fraud shifted from the basically from the banks and from the processor to the individual merchant. And there's a minimum set that the merchant takes responsibility for and has in the past. The difference is, as of October of 2015, if the merchant, small, medium, or large, isn't prepared to take at least what is called L1 certification, the ability to take chip and signature, dip the card and sign based off of the value, then if there's any fraudulent activity, if they're using a mag stripe after October of last year, the merchant can be accountable for that fraud. So the motivation in the U.S. and the reason that we're having this conversation up here about EMV, large movement by the merchants to make sure that the data that is being transacted is secure. And EMV is the next transition for us.
So if you're a merchant, EMV is attractive because it's helping you with fraud. But if you're a consumer, I mean, as we said, consumers don't perceive as much value in a chip card. It's just a new card they have to deal with and set up and dip, and it's confusing, and you don't know whether you dip or you swipe at different terminals based on where you are. So I'm curious if you think that the additional challenge faced by consumers in using these new cards is going to push them more quickly towards mobile payments, right? Contactless was introduced 8 or 10 years ago, but there wasn't a lot of adoption of it, and partly because there wasn't a lot of acceptance. But is this EMV push going to be the catalyst that mobile needs?
So I would say we're actually seeing it. Silver is integrated with Apple Pay and the ability to use, as the panel suggested, the ability to use near-field communication, bypass the dip, and actually just use the touch? Yes, because it's simpler. And so our merchants, the consumers for the merchants that are using our EMV devices that are out on the Silver tablet point of sale, we're seeing a much higher adoption off of near-field communication, tap and go, than we are off of struggling for the card, finding the card, inserting the card. And there's another piece associated with EMV that we haven't mentioned yet, and that is the actual settlement with the processor and the response back from the processor is slower than it has been in the past with MagStrip Reader. And so the ability to use near-field communication via tokenization, just tap and go, is faster than it is, much faster than it is with a card dip. So we're actually seeing a higher adoption with NFC. It's simpler.
And from a migration perspective, for all folks that are in the process of migrating to the EMV standard, the various network brands give you the facility to migrate over time. So from an issuer point of view, if you happen to be an issuer issuing magstripe cards today and you need to move to EMV, MasterCard and Visa will give you on-behalf services. But the main problem with on-behalf services today is the fact that an on-behalf service card is not going to let you change PINs very easy, because the support for PIN change is something that comes through a full-blown EMV implementation. So if you happen to own a card that was provided by an issuer who's in the middle of transit, you're probably going to be stuck with the PIN they assigned to you, and there might not be a way for you to change it. So that is one example of where that could cause unnecessary concern to customers. Another thing is EMV adoption right now, like I said, is really not all over. So in the Atlanta area, for example, there are several Walmarts that accept it. Some Walmarts don't. Most public stores don't accept EMV. So it's like you walk up to a point of sale, you swipe your card, and the thing will say, no, stick it into the slot below. And you stick it in there, and the instructions will say, keep the card there, don't remove it. And at the end of it, there's a loud beep after a while, and then you pull your card out. It takes longer. So as those various things kind of settle down and the process becomes easier for customers, people are going to probably find it a little tedious. But to the point the others mentioned, there is certainly a lot of long-term benefit from a fraud perspective. So if you're performing a card-present transaction at a point-of-sale device, the reduction in fraud is definitely a key factor. In fact, the industry is seeing it today, as both MasterCard and Visa have acknowledged. Fraud in the credit card space is now significantly moving to the card-not-present industry. So e-commerce is really where a lot of the fraud is moving, because the physical fraud at point of sale is getting harder with EMV.
So we talked a lot about EMV and NFC, so the tapping at the point of sale. But a couple of the providers that I put up there, Currency/MCX, Chase Pay, Walmart Pay, are going to all do QR code, as does Starbucks. So do you think QR code is DOA, or is it going to actually be exist in parallel with NFC?
I can take that. I think one of the benefits of the QR code is that it is not, it's more ubiquitous. It's not tied to just an Apple or Android. It could be used universally on any form factor, any OS. So I think that's a huge advantage. And I think rumored that the card brands will be coming out with new rates, either something in the concept of card holder present rate or a device present rate, which is going to allow for, it's not going to be as cheap as what it is at the physical point of sale today, what they call card present rate, but it will be somewhere in between a card present and then an e-commerce rate or card not present. So I think that that will continue to help drive it. But no, I think QR codes, I mean, I think it, you know, it's really, I mean, at Starbucks, I mean, they're QR code based, and it's pretty elegant. You can see it. There's a lot of people that aren't a fan of it, but I mean, ultimately, I personally think the NFC is a little bit more graceful. But no, I think that ultimately it's very alive and well.
Yeah, so we're seeing the same thing. It's we have some of our small businesses that actually, they're brands they distribute. The great thing about a QR code is that you can generate your own QR codes for your products or your items and attach it to your items within the point of sale. And so because of that, it's easier for the merchant to be able to allow consumers to transact via the QR code. But from a consumer perspective, I think you're right. It's and we do see that it's easier, and because our volumes are higher, for the consumer to just tap and go, as opposed to scan a QR code.
Yeah, just one other follow-up on that is QR codes and certainly both 2D barcodes and QR codes do require some additional investment on the point of retailers to have their POS systems upgraded. With NFC and now with the EMV standard, it's likely that a lot of that stuff will be forced upon retailers as part of the mandates. But what we've found in the marketplace is there's a lot of small and medium-sized retailers that are reluctant to upgrade their POS systems just to provide QR code support. But many of them will fall in line from an NFC point of view, so we might find NFC adoption to be a little faster than QR codes.
So one of the things we were talking about before the panel started was the holy grail of mobile payments, right? It's kind of like Uber. It's kind of like you don't have to make a payment. It just happens. You just walk away. I don't have to tap my phone. I don't have to swipe anything. I don't have to do anything. It just happens. And my question then is, how is that process going to evolve? Is that something that's going to ever happen at the point of sale? Will you be able to just pick up the goods and walk away? Or are you always going to have to do something with a device to make a payment?
Yeah, so imagine, if you will, blending mobile payments with IoT. You all wear wearables. You just maybe don't realize it. Yeah, not just the Fitbit, not just the watches, the Apple Watch, but earrings that have the ability as you walk through to be able to near proximity. Those are jewelry, gems, so they're presentable, but it's a payment mechanism. And the way you load them, believe it or not, is via USB or USB 2, and you attach it, you go out to a website, you put in your payment information as a consumer, and all it is near proximity. You walk through, or you're near proximity. The near field communication picks it up, you approve it, add your tip, or you're not, and you walk through. And it's seamless. Consumers love it because it's easy, it's simple, and they're going to flock to that in time because of the simplicity associated with it. And to your point, absolutely correct. Not just for EMV, but near field communication, and the devices that are being shipped are their standard fare. And so the merchants are being enabled with, we do in our products, we ship near field communication in all of our Android-based products. Our Apple-based product or iOS-based product also have NFC built in them, and so basically the merchants get them as part of the standard product that they receive.
I mean, and you would probably find, from, again, an experience point of view, if you could just walk into a grocery store and just load up your cart and just walk right out of the store and that's it. The technology is there today from an RFID point of view to make sure that the contents of your cart are registered. You add that to this kind of a payment model, and then the checkout counter becomes absolutely unnecessary. It's just to walk in, pick up the stuff, and walk out. How convenient would that be?
The other piece that's going to go along with that is that the merchants and actually the product manufacturers love, as consumers, we don't love, and that is they know who's purchasing it, they know the demographic, they know the frequency. So the bad news is, yeah, in some ways, in an aggregate level, there's some intrusion of privacy. The good news is the inventories, the stocks, all the waste that there was historically, that'll drop dramatically. Pricing will become more appropriate because they'll know what's selling in what market, what location, at what volume, what types, what colors, what sizes, et cetera, et cetera, et cetera. So merchants, retailers, and manufacturers become a lot more intelligent in terms of the products that are actually being sold. And a lot of that is tied back to the near-field communication.
So that was my next, I was going to go there, is privacy, right? So we're using this device for so many things. So historically, if I used my card, the merchant knew what I'd bought, and there was an article a few years ago about Target and how they had used this woman's data to figure out that she was pregnant, and that was a little bit kind of overwhelming for people. Well, think about the fact that now if you use your phone, they not only have your card data, they have your phone data. They know where you are, where you've gone, where you came from, what you were researching before you got there. There's a lot of information they could potentially access on your phone, and they can use that information to figure out lots of other things, which may be beneficial, but also may be detrimental. And so what's the right place for that trade-off between privacy and convenience?
Definitely not a privacy attorney, but no, I mean, I think it's just about responsibility at the end of the day. I mean, consumers, if they're willing to, I mean, heck, they'll give the Social Security number up these days for a $50 gift card. But I mean, I think if there's enough value in it, I mean, they'll give the data up, and as long as the merchant uses it responsibly, I think it's a win-win. But I think it's when those that don't have proper disclosures are doing things, with your data that you didn't consent to. I mean, that's where they could get in trouble. But I think, the FTC has certainly weighed in and provided best practices in this area. They continue to watch it very closely. But I really think of it, and these days too, it's really about, designing these solutions with privacy in mind from the ground up, and not trying to layer it in after the fact. So,
proper disclosure is nice, but does anybody actually read the T's and C's they ask you to agree to? Right now. So
there are several vectors where you could actually find a lot of benefit in this kind of an approach. I mean, I don't know about most of you, but usually when I try to when I'm shopping for something, I generally am able to do the research online and narrow it down to 2 products. But going from 2 to 1 is really where the issue is, and at that point, things like availability, price, things like that become important. But as all the research that you're doing online is really not private anymore, with the ability of both GPS and iBeacon technology out there. I mean, you walked in, let's say you were researching for, say, a receiver or something for your home theater, and you walked into a Best Buy, and you happen to be standing there, and an iBeacon picks up, and there's an iBeacon data vendor that's actually transmitting that data instantly to somebody else, and from the H.H. Gregg store 2 miles down the road, you get a coupon saying, come into our store and you can buy it for 10% off. So that kind of marketing models will be able to provide retailers the ability to target you individually for the specific product you're looking at the specific location you are at the time you're actually there. And it's a decision at that point, is that visibility in the public domain something that is worth the 10% off? And a lot of consumers might say yes, because they've already traded off a lot of that information. Whether they like it or not, the information's out there. So I could probably do with the 10% when the price is $1,000.
Yeah, I think I just quickly add to that. Yeah, I mean, as far as in that scenario, I think when I say consent, it's not necessarily or proper disclosures. It would be a situation where you make it very obvious within the interface to opt in or opt out to something like that. So again, that's where if there's proper disclosure, proper ability to opt out to something like that, then that's where I see it very responsible, and those companies will be fine. But I think it's when they do things without really your knowledge is where they could run into some trouble.
So another thing that you hear about, so we've talked about the different applications that are out there, the different payment types, and they all are card-based, right? It's a very card-centric approach that we've been talking about. But a big push behind MCX, and certainly Walmart was a big proponent of this, was how to make the cost of payments less for a merchant, right? So the card payments are expensive. And so there's the push towards using ACH. And the question then is, are consumers willing to give up that information? Are they confident in that, and are merchants wanting to add that to their long menu of payment options?
So I would say yes, because there will be incentive for consumers to do that, because merchants will make it worth their while, and there will be some incentive for that. Little known secret, maybe you know, maybe you don't, but with EMV, The certification process for level 1 and level 2 process for EMV includes ACH and debit from the manufacturers that are actually providing the devices in market. And so if you certify from a credit perspective, you also need the ability in your devices to handle ACH or what is debit. And the pricing structure between the two, dramatically less. And so this little known secret in time, less of a secret, not necessarily a secret, it's just a byproduct of the certification process as you go through the EMV level 1 and level 2 certification process. It's included in the device, and so the ability for a merchant to accept ACH and therefore provide some incentive back to, whether it's in the form of coupon or in the form of gift or the end of year stored value, for those merchants that take advantage of that, it will actually in many ways decrease the price of payment.
I would just add, I think Target, I think, is a great example that, I don't know how many Target Red Card users there are in the room. Actually, I'd be curious. You could raise your hand. Target Red Card. Who's got that? So, they've got a product that's ACH based. They call it like a decoupled debit product, and they've done quite well. But I think it goes back to the value. Is there, for a consumer, is there enough value in it for me to do anything differently? And they've thrown a lot at that program: free shipping, 5% off in store, and other incentives. So the other thing about the MCX, which is interesting, is this this arrangement that they now have with Chase. Chase is one of the top issuers on the credit card side, and also has one of the top adoption on the merchant side. And they've got a network where they licensed Visa's underlying technology, clearing technology, so it's called ChaseNet. So they basically are creating an infrastructure that allows them to take advantage of their scale and clear transactions on us, so to speak. So their incentive now, they partner with MCX, and they're going to be going to all the MCX participants to adopt Chase Pay. It's not out yet, as Ginger said earlier, but in trying to figure out how do they really message it to the market, because at the end of the day, people that aren't close to payments, it's kind of confusing in this. But at the end of the day, they're offering these merchants really free clearing if they use if I use a Chase, say a Visa, a MasterCard, a Visa card. It's Marriott. That's the card I have. That's underlying bank is Chase that issues that. So if I end up going and using that at Walmart, assuming that it all gets implemented, then Walmart would not pay clearing on that because it's a Chase card and they're using it at an MCX merchant. So it'd be interesting to see how that dynamic plays out.
And from a consumer perspective, if retailers are actually going to be discounting their products and actually passing on the savings they're making through moving to a non-credit card kind of market and using ACH as a form of cheaper retail payment mechanism, I think the issue will be just that. From a pricing perspective, customers today don't see the effects of the actual interchange rates that merchants actually pay. So from if I have a credit card and that works, why would I want to have another vehicle that actually exposes my checking account through the ACH model? Or if I really want to use my ACH, you always have the option to purchase a general purpose reloadable prepaid card in the marketplace, load that up with through ACH and regular deposits, direct deposit, whatever you want to use, and use that as a credit card vehicle to actually make payments. So from a consumer perspective, unless consumers actually receive some valuable credit for actually using a non-credit card, not really sure there'd be significant penetration of ACH-based vehicles.
One other point I want to make on this, and that is international. So international payments, as it relates to ACH, there are other countries that are using social-based payments. So in mainland China, WeChat. If you're familiar with WeChat, think of preloaded account inside of Facebook, and you've got it on your mobile device, and you live on that, and you're walking into a small retailer, and you're making payment using NFC. And behind that is a value associated with WeChat. So it's not in the traditional, in the way that we would think of an ACH or a credit that risk is actually being absorbed by what is a social firm. And so just to give you an idea, 800 million devices in a country to where the social payment is becoming the norm. They're growing 14% annually in terms of method of payment.
I've heard stories where you almost can't make the payment if you don't have access to WeChat. You got to find somebody to do it for you.
That's right.
I've got a bunch more questions, but I want to make sure the audience has a chance to ask any questions that you guys might have. Yes, sir. So the question was, how is the processing on the back end different between ACH and debit?
The actual mechanics of ACH versus debit. So it's a small nuance in terms of the flow of the process between the two, but the difference between ACH, I think the better, so it's a small difference in the way that the processing actually happens. They both have guaranteed funds behind them. When you go into a credit situation, then you've got a higher risk, and there's an underwritten risk associated with the credit. So the difference between ACH and debit is small. The difference between debit, ACH versus credit is quite large, which you know. But the difference is simply just in the mechanics of the processing on the back end. Yeah, technology, price of technology. Yeah. No, but it's price of technology, yeah, and it isn't much.
Yeah, and truly the truly ACH market that is completely independent of the networks is another key point in that debit travels through the networks. So all the network settlement rules, all the network charges, a lot of that stuff is still part of the debit network. But a true ACH market will not have any of the networks involved.
So the question for those in the back was about the other players we haven't mentioned, PayPal, Square, Level Up, Coin, that are trying to get into the space in varying ways, and how do we see that playing out?
Okay, so I'll take that. So there are alternative forms of payment because they offer differing types of value. Stored value in PayPal's case is an example. It doesn't necessarily mean that they go away. However, on the back end, to be able to preload and tie to a guaranteed set of funds, which in some cases with those that you mentioned you can, and in some cases, if it's social as an example, the risk is just moving from maybe an issuing bank or from a processor over to a social-based business, much like we would think of telecom carrier carrying the risk of you paying your bill, but yeah, you're going to put the payment on telecom carrier. The big driver will be basically be consumer consumption of the product when they use it, and it comes down to simplicity. But I don't think, in our experience, those don't go away; they stay. PayPal, as an example, because it's got stored value. Social, because of the ease of use. If you want to talk about, Bitcoin and other mechanisms that are associative values, and the chance to devalue what is a currency, common currency that we've been using for a few hundred years, my opinion, I think that's got a tougher road, but that's my opinion.
And I guess the other key peer-to-peer payment market is really where these other forms of payment really flourish more, because that's basically where traditional forms of payment can get very expensive and sometimes get cumbersome. So I think these other forms will really prove very useful in that peer-to-peer space.
I mean, you threw out a lot of different players in the ecosystem there. I mean, they all, to me, do very different things. Level Up is trying to add value. Trying to create a compelling ROI, kind of a marketing loyalty play, heavily focused, on the restaurant sector at this point, trying to expand. PayPal we touched on. Coin is an interesting one that you mentioned. That I think that is the one that they try to provision multiple cards onto one card, and I was really scratching my head with that business model, and I think that they are now pivoting. For one, they were charging, what, $50, $75 or something to buy the card. I'm not sure, that there's that much of a problem that a consumer would actually do that. But due to EMV hitting the market, their whole business model got thrown upside down. So I think they're trying to resurrect themselves and doing something with MasterCard around wearables. But in any event, yeah, there's a lot of different players. It is interesting to look back and who's succeeded, who hasn't, and it obviously can inform the future quite a bit.
And you didn't even mention other players like Tabbed Out or Scout Mob or others that are kind of playing around the fringes of the space as well. So there's just a lot of fragmentation, a lot of people trying to get into it. And The challenge really is who has the right experience and the right ability to really change what's happening to make it, adoptable by a broader range of people and merchants. Okay, so question number 1, is there a correlation between PCI and EMV?
So they really complement each other. One is really around one is an authentication standard. We talked about the chip, the actual chip. It's a standard way to authenticate a card dynamically, and then PCI is more of a broader compliance framework to help mitigate the risk of data breaches. So at this point, there are incentives the card brands have put in place because of the proven fraud reduction that happens in the counterfeit setting, that if merchants adopt EMV and 75% of their transactions are flowing through EMV-enabled terminals, then they actually can get a waiver from having to validate PCI compliance. It's an incentive. Again, they're trying to recognize and want merchants at the end of the day to reinvest in more secure technologies.
EMV will stick. PCI will not go away either, but it will take a backseat to what is the activity that forces security, and EMV does that.
And just to follow up, if you look at the NFC technologies that are being used by the wallets today, the standard wallets, all of them use tokenization services being provided by MasterCard, Visa, and the network brands. So to that end, from a PCI perspective, one of PCI's biggest issues is being able to store. The DSS standard within PCI basically mandates the secure storage of sensitive data. And the sensitive data definition includes PANs. And if your credit card number is compromised, that's a problem. But if your credit card number does not even travel on the network or is instead proxied by a token, effectively that piece of PCI is really no longer in play. So to that point, adding to what Chris said, the EMV standards and the way the NFC implementations realize those standards kind of reduce the necessity for some of PCI's powerful mandates.
Yeah. I think the ultimate utopia is the point where every transaction in every channel, whether it be in the physical world or remote setting, card present, or internet, is dynamic. So the ability to devalue the data, the card brands talk a lot about that, and that's what EMV does, that's what tokenization does, and point-to-point encryption is another big technology adoption. It's starting to get wide. It's not wide adoption yet, but it's coming, and that's really was driven by the Target breach. A lot of folks started to look at that, and as we know, EMV would not have prevented the Target breach. It would have certainly influenced the outcome of the breach, because that credit card data in a pure EMV transaction is still in the clear. When you dip it, it could still be stolen. And the ability to replay that is largely reduced because of that dynamic data I mentioned, but you can, in some situations, can use it to make a card not present in e-commerce transaction. So the point we get to where every channel, every transaction is being dynamically cleared through tokenization and some of these other technologies, that's when PCI will, I think, it'll be just more concentrated on the folks that are doing the token, holding those tokens and these different service providers. But as far as from a merchant perspective, it will be potentially removed.
So one more question, all the way in the back over there.
Yeah, okay, so the question was, where does biometrics payment play against EMV standards today, against other processes that payment at the terminal might accept? To kind of the leading question, does that have a future? Does it not have a future, in our opinion? In my opinion, absolutely. It's a question of time, whether it's 10 years, 8 years, 12 years, 15 years. It's coming. Biometrics payment. So your bank account and your stored value would be tied to your biometrics. And then in the future, the way that you make payment may be a similar type of biometrics. You don't touch. You don't. It's a reader that as you walk out. Back to the comment earlier about loading up groceries and just walking out the door. That's going to be realized. It's just a matter of time. It'll be tied to biometrics, and it'll be much more difficult to fake. The ancillary to that is, or the follow-on is, then where does fraud happen? Then fraud happens in the position of card not present or biometrics not present necessarily. And so that's the next area that needs to be secured.
Yeah, it's a really good question. I agree, and it's interesting to think about it in the context of Apple Pay or one of these other, Android Pay or Samsung Pay OS. But I mean, I think at the end of the day, Apple Pay, if you think about it from the perspective of identity management, really, and that's why Apple was able to broker getting 15 basis points from all these issuers that provision their cards into the Apple Wallet is because of the layers of security and the biometric aspects. So if they can really figure that out, I mean, it will be used for all kinds of other things beyond just payments. So to me, that's where, if you can really effectively identify the consumer, I mean, that's where I think the IoT stuff will come into play. And it really, the sky's the limit where that could end up going.
I guess the one concern that has been documented several times from a biometric perspective is what happens if biometric data is compromised or counterfeited on server systems? Because while you could be issued with a new credit card, I mean, they can't issue you a new hand or a new pair of eyes. So that concern is something that needs to be first managed before I think biometrics is something people are going to get very comfortable with.
So I think we're out of time. I want to say thank you to my panelists, and thank you guys all for your great questions as well.